Happy Monday. It's July 28th, 2025, and time for your Monday market update. Let's take a quick look at our McHenry County numbers for the last 7 days. We had 171 new listings hit the market, 140 under contract, so about 30 less under contract than newly listed, 97 closed sales. We're starting to slow down a little bit, 57 price changes. It's kind of a lot. 1 expired and 48 currently on the private network. So we have what's called, what I'm calling kind of the tale of two markets. So I have people asking me like, what is going on with the housing market? Because, you know, some people are seeing homes sell very, very quickly and going under contract with multiple offers. And then other homes are sitting on the market doing price reductions and having longer market times. And it has to do a lot with affordability. Affordability is something we talk about a lot because it greatly affects our housing market. So the average sales price in our area is about $400,000. So in Crystal Lake, Cary, Algonquin, McHenry, Woodstock, like all of those areas, it's about $400,000, a little higher in Crystal Lake and Cary, a little lower in Woodstock and McHenry. Huntley's about a little higher at about $410,000. So those are the numbers that we're kind of looking at as the average. Okay, so anything under the average sales price is still moving very, very quickly. So if we have a house that hits the market at $350,000, might be a small house, might not be very updated, but might be well maintained, that sucker is going to sell in no time flat. We're going to have multiple offers. It is going to be selling very, very rapidly. Now, on the flip side, if you've got a home that's maybe like $700,000 and maybe it is well maintained, but maybe needs some updates, maybe, you know, isn't quite what people are looking for, man, that sucker is going to sit on the market forever. They're going to have to do price reductions and it's eventually going to sell below list price. A home that is very, very well maintained and very, very like impeccably updated, it is going to also sell probably pretty quickly in that higher price point. But man, it better have every bathroom done. It better have the most fabulous basement. It better have the most awesome kitchen ever. Anything in that higher price point still has to be the prettiest and the best price in order to move. So we're kind of seeing these two different markets. Now, even things under $400,000, even if it isn't the prettiest, it's still probably going to move, even if it needs updates, because more people can afford it. This is not rocket science. To some level, this is pretty easy to figure out. The more people that can afford your home, the more eyeballs you're going to have on it and the more people you're going to have interested in purchasing that home. So we've got two very, very different markets happening, under $400,000 and over like $600,000. You're going to have different buyers looking at that. So it kind of makes sense, but that's a big question that I get from people is like, why is one house selling really fast and still has multiple offers and the other is sitting on the market? So it kind of it has to do with affordability. Now we've got a big jobs week coming up. We've got all the jobs reports coming out tomorrow and Wednesday. And we're expecting that jobless claims are going to go up, meaning unemployment is up. That is one of the key indicators that the feds will be looking at. They are meeting on Wednesday. We do not expect any rate cuts this time around, but their comments and what they say is going to have a big impact on what happens in our economy. We also anticipate some inflation numbers coming up slightly higher. So the two things that the feds look at when they're cutting rates are inflation and jobs. Now, when they're conflicting, you know, jobless claims are going up, so unemployment is going up. Inflation is also going up. Well, those are two contradictory things. They want inflation coming down and jobless unemployment going up in order to have rates go lower. So we're kind of in this predicament where we don't really know what they're going to do. It's, again, a little bit of stagflation, which is really, really hard to get out of. So tariff news is also coming out this week. We struck a deal with the UK. And so that's going to be helpful. But also China is we still don't have a trade deal with China. So we've got some sort of impending decisions happening with the tariffs that will greatly impact our inflation and all of our economic news as well. So we've got interest rates really just flat. The lowest interest rate that we saw in recent history was in the end of September of 2024 when rates came down almost to 6%, and they've been in the mid 6s, low 7s ever since pretty much. So we see that kind of continuing. Now, something that popped into my news feed this morning was, what if rates go up? That was not something I had thought about, and that's not a very pretty thought, but if you're a buyer, you might want to think about that. Because if all of a sudden inflation starts going up with tariffs, that could be really bad if we start to see interest rates close to 8% again, which we saw very, very briefly in October of 2023. So we need to watch those rates. And if you are a buyer wanting to get something under contract, the sooner the better would be my advice, because if those interest rates go up, now they also could come down. We just don't know. It's this total, like, you know, I wish I had one of those 8 balls, magic 8 ball that could actually tell me what was going to happen with interest rates, because we just don't know. But there is a chance that they could go up. That is not something that we've talked about. We've talked about interest rates coming down. Oh, we're hoping that they go down. We're hoping they'll go down. And now I'm like, well, what if they go up? That will be an interesting scenario. Now we still, of course, have the gray tsunami happening as well, which is all of our baby boomers turning 65 and retiring and wanting to downsize, but many of them are cash buyers. So that doesn't really implicate, the mortgage rates don't really have a whole lot of bearing on their decisions. But it is an interesting market. It is a struggle bus right now for real estate agents. There's less transactions. We're going to have less transactions this year than we even thought. And so it's going to be really difficult to get through the end of the year and see what's going to happen with these interest rates and inflation. And but right now, it's a good time to sell. We've got interest rates holding pretty steady in those, 6.75 rates, about 7% is what you'll get from your lender, maybe a little higher than that. And we have inventory. Obviously, we're getting a little bit more inventory, which is helpful. So, whether you're a seller or a buyer, what I always tell people is don't try to time the market. Do not try to time the market. Do what works best for you. If moving right now is what works best for you, then do that. If you think you're going to be 2 years before you're going to move out of the area and you want to rent something, or you're thinking about making a move based on the timing of the market, I would probably not do that, because we don't know what's going to happen with the market. If interest rates go up, prices will probably come down. If interest rates go down, prices are probably going to go up, but we don't know. So we'll continue to watch the Fed reports. We'll continue to watch the unemployment reports and inflation. And next week, we will have all of our July numbers, because it will be the first week of August, and we'll be able to get some of those July numbers, so we'll kind of get a reading on some of how these trends are panning out. So if you have any questions, of course, email me at miranda@mirandaaltteam.com. You can DM me here on social media, or you can call me at 815-529-0777. I'd love to talk to you. Have a great day.